If you want to know why some of your order blocks are getting respected and some of them are not, then you have come to the right video. What is going on, guys, and welcome back to my channel. So many of you guys know that I have been trading for over 5 years now, and over those 5 years of trading, I have taken hundreds of trades using order blocks. So in this video, I'm going to be breaking it down for you guys what I classify as A+ order blocks or high probability order blocks. With that being said, let's get to the video. Alright guys, so before we look at the charts at some live examples, let me break down for you guys what exactly is an order block and what exactly do I consider A+ order blocks or high probability order blocks. Now, first things first is what is an order block, right? So from Google, this is the literal definition. Now, it sounds really complex, confusing, but I'm going to break it down for you guys very simply. Now, order blocks are specific candles that when properly viewed in institutional context can highlight smart money buying or selling. Now, order blocks are specific candles. Now, what are these specific candles? Well, these specific candles tend to look like bullish engulfing candles or bearish engulfing candles. Now, in this example right here, what we can see is we have a bearish candle followed by a bullish engulfing candle, and this is what we call an order block, right? However, the difference between a bullish engulfing candle and an order block is that we are giving this institutional context, meaning the reason why this is considered an order block is because this is a sign that smart money is buying. Now, how does that make sense? How is this a sign that smart money is buying? A question for you guys is, when the banks are transferring large amount of currencies, do you think that they just place one large order? For example, if they're trying to transfer 100 million GBP to US dollars, do you think they're going to do it in one order? No, they're not. Why? Because for them to place it all in one order, they will not get filled efficiently. They will not get the price that they want. So for that reason, they break it up into smaller orders. Now, when you have an order block, this is an indication that smart money is in. Now, smart money is buying. There's a lot of buying pressure. Eventually, what we try to do is we try to trade with smart money, try to trade with the bank. So for that reason, when price comes back into this order block, the banks are also placing additional orders and we are also getting in with them. So the banks get the first entry, and when price comes back into the order block, that's where we get our entry. Now, this is an example of a bullish order block. Let me show you guys a bearish order block. So as you guys can see here, there are 4 types of high probability order blocks. Out of my 5 years of trading, out of my hundreds of trades taken using order blocks, these are the top 4 which I highly recommend. Now, the first order block is when the order block takes out liquidity and continues to the downside. Now, when we are in an overall bearish trend, what we are trying to do is find bearish order blocks, right? We're trying to continue to sell. We're not looking for a bullish order block in a bearish trend. So in this example right here, we can obviously see that we are in a bearish trend. So the first type of order block is an order block that takes out liquidity. Very simple. Now, if you don't know what liquidity is, that is a whole different video. But the second type of order block is a top or bottom order block. Now, as you can see, the second type of order block is the top or bottom order block. Essentially, what this means is that if there's an order block at the very top of the new trading range, then we can expect for price to come back into that level and reject to the downside. For example, this can also be considered a top order block. We have an order block at the top of the trading range. Price comes back within that order block and rejects to the downside. Now, these last 2 high probability order blocks are my favorite order blocks. So this one is when we are overall bearish. As we can see, we have a bullish candle followed by a series of bearish candles, and this is still considered an order block. Now, this is also a top order block. However, what makes this different from the previous example is that this order block has liquidity being taken out, has a high being taken out before we come back into that order block. So this is what I consider a break of prior high back into an order block. And that is what I consider one of my top A+ order blocks. Now, as you can see here, this is a top order block in here. Price creates a bullish candle, bearish engulfing candle, and that is another entry. And now for the last one, this is the same thing as number 3, is just for a bullish. So if we are overall bullish and we see that price has taken out a prior low before coming back into a bullish order block, that is a great A+ order block to enter into. So now with that being said, let's look at some live examples from recent price action and I'll see you guys on the charts. Alright, so I'm going to go over some examples of these order blocks that I just mentioned. I'm also going to be showing you guys an A plus order block that I entered a 40 lot position off on the lower time frame. But before we get into all of that, I want you guys to understand that we are not just trading order blocks in and of itself, right? We do need a bunch of different confluences, a bunch of different ICT concepts, but let's get to it. Now, the first type of order block that I mentioned was the liquidity grab order block, right? So in this recent price action, the past 30 days, what we saw was that price took out this high in here. We know above highs, there is liquidity. Price then broke market structure, took out the low in here, which can potentially lead us to thinking that we are now in a bearish trend. So what I saw was that we had this liquidity grab order block on the higher time frame. Like I mentioned, a bullish candle followed by a bearish engulfing candle. So it was at this point where we can see there is a liquidity grab order block, and I was maintaining bearishness, selling off this level, and I was able to catch a few shorts. So that is the first type of order block, right? Now the second type of order block is when we are in trending markets. For example, when we are bearish, as we can see in this example right here, price is pushing to the downside. What we see is that price created an order block at the top of the trading range. Price created a low, retraced back into that order block, and rejected to the downside. Now, this is the new high. This is the new top order block. There's an order block at the top of a new trading range. Price comes down, creates a low. Price retraces back into that order block, and then we see a nice rejection to the downside. So this is an example of a top order block. Now, with the bottom order block, it's the same thing. Let's look at price action when it was trending to the upside. So this is an example of a bottom order block. As we can see here, we have a bearish order block at the bottom of a trading range, a high being created, price comes back into a discount level and created this bottom order block. And now finally, let's talk about the last two order blocks. Now, as you can see here, this is a clean example of my favorite type of order block, which was the break of prior high order block. So like I mentioned, we need to be overall bearish if we're looking for bearish order blocks, and that is exactly what is happening on the higher time frame. We are in a downtrend. What we notice is that price created an order block. We have a high in here, price comes back, takes out, sweeps the liquidity above the prior high, comes back into a more premium level, into a retracement level, and also into this bearish order block in here, the BOPH, break a prior high order block, and then we can see that price has rejected to the downside. Here is where we can go on a lower time frame and look for some shorts during kill zones. But this is just an example on the higher time frame. So let me show you guys one last example on the lower time frame and how you can find entries off these order blocks. Now, as you guys can see here, we are on the lower time frame, on the 1 hour. That's where we can find entries, 1 hour, 15 minute, sometimes 5 minutes. And we can see that we are overall bearish on AUD/USD, right? Price has officially filled the SIBI, continued to the downside, and I was maintaining bearishness on AUD/USD. Now, what I noticed on AU was that we had this 1 hour order block in here, right? This bearish order block in here, and I didn't see price coming up any further because we are very bearish on the higher time frame. What I noticed was that we had this high in here, price came back, took out the high, came back within this 1 hour order block in here, and that was when I decided to enter a 40 lot position, placing my stop loss above the high for a clean 1 to 2. As you can see right here, this is a picture from my Discord just to show you guys that this was not hindsight. And then around London session, I did execute, and usually London session does have the high of the day. And then what we can see is that price has hit my 1 to 2, and potentially it could come and take out this low in here. Let's see if it does that. And that's exactly what we see. So these types of order blocks can be both used on the higher time frame and the lower time frame, but that is essentially the 4 types of A+ order blocks, or the order blocks that I love to trade off of. If you did find value in this video, please like and subscribe. But thank you guys for watching, and I'll see you guys in the next video.